Jeff Hirsch, September has been flat so far, but historically it's not a great month for stocks according to the Stock Traders Almanac. So should we be scared?
I think so. Not only the whole month has not been great, but the latter part of the month is where the real trouble generally brews. So first part of the month's been up, very typical. Week after triple witching, S&P's only up about 4 times in the last 25 years. End of third quarter, portfolio adjustments by fund managers becomes a very volatile and downward biased time.
That said, when you have a down August, it usually leads to at least a better September. It moderates it a little bit, historically, right?
Except when August is really bad, you've seen September down even worse. So we're in that area where, you know, the September is a troubled time period, worst month since 1950, August being the worst month since 87. No matter how you slice it, it's still a troublesome time for patience and caution.
That sets up, however, for October, which is generally a great month for stocks, despite the fact that you had the 1987 crash, the 1929 crash, but still it's a bear killer.
And various other massacres and those sorts of things. October, bear killer, killed or turned the tide in 12 post-World War II bear markets. Best time to buy stocks, we'll look for a MACD technical trigger signal to get back into our best 6 months sometime after October 1st. So, you know, all the sectors come around on the bullish seasonal wagon as well, and we'll be picking baskets of stocks at that time too.
All right, so which type of sectors, which sectors are you going to be looking for when the time comes? One
of our favorites for the seasonal play and also long-term is biotech. Something we traded very well from about late October last year when we got our buy signal till the spring when we got out of it. So biotech, tech, those are some of the best sectors to get into. Also banking and consumer stocks. A lot of things turn bullish around September, October.
And there's actually a mutual fund which is associated with the Stock Traders Almanac. Can you tell me about that?
Probabilities Fund, ticker's PROTX. I'm a consultant on the investment committee for them, and they were inspired and based the fund and the trading strategies and rules primarily on the Stock Traders Almanac seasonal patterns. And it's trading ETFs, long and short, on the S&P every day with different biases. And they've been out of the way of this downdraft because of the Stock Traders Almanac seasonalities and their calendar bias.
All right, and then finally, the Stock Traders Almanac is famous for the maxims, the market maxims it tracks. And one of the things that market traders always talk about this time of year is the old adage, you sell Rosh Hashanah and you buy Yom Kippur. Does that work?
I think it works mostly because of 2 reasons. One, where it sits in the calendar. You're talking about a very volatile time period, either September, October. And because it does remove several, a decent amount of market players from the playing field, which sort of takes some volume away. And here we have it set up where we have after a nasty August, we've got a little rally into September ahead of the Rosh Hashanah holiday. Wouldn't be the worst thing to at least be cautious between, during the high holidays.
And pray for a bull market. Thanks a lot, Jeff.
Thank you, sir.
And thank you for watching The Street.